Good morning, traders. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and I'm going to give you guys some A-plus trade setups today. We're going to cover some technicals and fundamentals using the best tool in the game, Mrkt AI. If you want to get started with it, use discount code KEV to save 10%. In my opinion, guys, ever since I started using Mrkt, it has 10x'd my performance, my patience, my ability to read fundamentals, and my ability to just read trend have been through the roof, all because of Mrkt AI, a very simple platform to use. What's going on, Nico? Yes, sir. Let's get the ball rolling. Guys, if you're ready to make some money today, smash that like and subscribe button because Market in the Morning starts right now. Here we go. Nice. Let me get my screen up and running. The first thing I want to look at today, guys, is going to be gold. Guys, drop whatever tickers you're looking at. We're going to cover gold. I'm feeling a bit more bullish today. Gold's been in a bit of a range. We see here on our highly time frame, it's still slightly bullish. We're looking at Mrkt AI right here on the left-hand side, and our higher time frame targets are 40.46 and 38.40, which would be a big pullback level to the downside on gold. Right now, we want to look at our intraday to see really what's impacting gold and what we might be looking for. So the first thing I always want to do whenever I pull up Market and do my own fundamentals in the morning is I want to pull up this little brain icon. This gives me a quick summary of whatever happened with gold overnight. So if something news-wise came out, something globally came out, I'm going to be aware of it. So gold futures climbed above 4,000 per ounce on November 6th as the US dollar retreated. So here we go, guys. The US dollar's pulling back. This is going to help gold move higher for a 4-month high. So guys, the dollar was just at a 4-month high. That's where this big weakness in gold really came from. Investors are reacting to the ongoing US government shutdown, which is currently costing the US $15 billion a week, the longest in history, and mixed signals of Fed Reserve policy. A lot of you guys might know that we had about a 95% chance of another Fed rate cut in December. Powell spoke a bit over 2 weeks ago now for FOMC, and he didn't sound that confident in rate cuts, which gave the market a bit of a hit, right? Because without optimism, it's hard for markets to rally. Spot gold rose 0.7% to 40.11, while December futures gained 0.7% to 40.21. Market sentiment remains cautiously bullish, so we're still bullish. We just want to be a little more cautious on the parameters. What's going on, Corner of Wealth? And with the analysts citing a weaker dollar, political uncertainty, which uncertainty and a weak dollar, this screams bullish for gold, and expectations for a potential Fed rate cut as key drivers. So even though the odds have decreased for the Fed rate cut, it still is higher than the 50. It's higher than 60. I believe when Powell spoke, it brought it from 95% all the way down to 64%. Last time I checked yesterday, it was back up to 70%, but that's still nowhere near the certainty of 95, 96. Though the possibility of a December cut has been declined from 90 to 63, as I was just saying before, guys. Silver, platinum, and palladium, also posted gains, reflecting broader precious metal strength. So that's also a great lead for me on gold. What's up, Jack? Good morning, man. So now that we have gold selected up here on Market, we're going to scroll down on our homepage, quickly brief through our live news, our high impact. U.S. unemployment rate rounds up to 4.4% in October. Israeli military warns residents of 3 villages in southern Lebanon. The deal with Eli Lilly and Novo Nordisk officials is expected to be lower price of obesity drugs. So nothing too major. I will say there were a few bank high impact newses, right? So Bank of England's Bailey, Texas Attorney General, and a lot of these Swedish central banks, a lot of these, when we see bank reports or headlines, will have an impact on gold. So now that we have gold selected and we have it on our intraday, we could come down to what's impacting gold. And this is going to give us that summary that we just read up there before, but really broken down, and if it's a bullish or bearish impact. So the dollar weakness, guys, the US dollar fell 0.2%. I'm going to show you the dollar right over here on our chart. On the left, on the right-hand side over here is Trading View. So this is where I like to do my charting platform. This is the 15-minute time frame, and we see the dollar is on a pretty steady decline right now, but we never want to be too zoomed in. We want to be able to zoom out on our chart and make sure we're looking at the bigger picture. So something I'll note on the dollar right away is we are sort of near this area of support. We see that when price enters this area, before it was resistance, now it was support, and now we're back in that area again. So something that I would look for gold longs would be to see if the dollar could break through this area to the downside. If that's the case, this could really help support gold longs back to those all-time highs. But right now, guys, looking at the dollar right here, check this out. We're trying to make higher highs, and higher lows. So even though we're pulling back a little bit here, it's still coming off of some higher lows and higher highs. Guys, something cool with market is the live news tab has multiple languages. So let me just pull that up real quick. So live news, you're going to come down over here, English, and you could change it to any language you want. That way you really don't miss anything. Technical support, late day selling erased most of Wednesday's gains, but price remains above 20 EMA and key support at 67.74. Oh, we're back on ES. Let's get that back on gold. Government shutdown, the longest in history. Trump now accounts for half of the government shutdowns. Yes, Subjati, this is GC, which is gold futures, which would also be similar to if you were charting and looking at XAU USD, which is the Forex pair, gold and the dollar. Labor data, a stronger than expected ADP report, 42,000 new jobs versus the 28,000 expected, has reduced expectations for a Fed rate cut. So again, that's going against the odds. That is a bearish sentiment for gold. But overall, the weak dollar is really what's helping gold drive higher. Let's pull gold back up here for a moment. A trade setup that I was looking for on gold, and I'll pull up the chart for a moment and we can see. And I also want to show you guys our key levels on market. So market, gold, intraday, we see that market gives us two key levels, guys. Well, two sets of key levels. Higher time frame, which gives us the daily time frame, some key levels. Look at how well this 4046 was right here. Respected, respected, respected. It was support when we were above it. It was resistance when we were below it. What's going on, Kelvin? Yeah, you guys can follow me at Trading with Kev right over here. Trading with Kev on Instagram. I post content daily, market updates, trade recaps, trying to keep you guys in the best spots in the market because knowledge is key. I mean, consistency is key, knowledge is key, and market brings you that knowledge on a silver platter, silver spoon, whichever way you want to call it. Yeah, top left, the brain icon right here. So corner wealth, we did cover this before, but whatever ticker you're on, what's cool with market, guys, is it gives you the option to have a watch list of up to 5 symbols you like to look at. So for me, it's the ESNQ gold, and I even have the dollar and VIX on here. So if I want to see a quick read of the dollar, I could say, okay, well, we have an intraday, slightly bearish, and I could scroll down, and now it gives me what's impacting the dollar intraday. Now I could sort of do a comparison of, is the dollar giving us a stronger bearish sentiment and why? And is gold giving us a stronger bullish sentiment and why? If both of these can co-align, that gives us the confluence and confidence to take that long trade because both of them are looking to trade in those opposite directions. Tariff legal risks, this is another big one that's really affecting the dollar. Because we don't know, man. They might say, listen, these tariffs have been illegal. Trump, you haven't been allowed to do these. What are you doing? And it might pull all the tariffs right off like that. So we don't know yet. Guys, make sure you smash that like and subscribe. We're going to do Market in the Morning every Tuesday and Thursday, giving you guys the best trade setups from 8:30 to 9. Now, something I'll note, guys, here with Gold GC, which again is XAU USD if you're trading Forex, is the catalyst that we have coming up. Now, we did have some jobless claims coming through, but because those are from the government and the government's shut down, we're not getting that data. Just like CPI, PPI, we're not getting inflation data, we're not getting jobs reports. It's giving us a very difficult time in the market, guys. It's not giving us much clarity or optimism. DJI, yeah, we could take a look at DJI. Let's see. DJI would be, that's the Dow, right? So I'd probably prefer to look at the YM because I'd like to see, oh, that's cool, guys. You could add, it says up to 5, but apparently you could add 6. Shh, don't tell anybody. But YM, same thing. Wall Street rebound lifts sentiment. But futures, what'd that say? On September 6th, the mini Dow Jones Industrial Average rose 0.5%, closing at 47,311, supported by strong economic data and easing concerns over a potential AI bubble burst. A lot of people have been talking about an AI bubble, guys, for how long? Let me know in the comments if you think we're in an AI bubble, because I think that's just silly. I think the way that markets have been consistent, the way even Nvidia has been trading, I'm not sure how long you guys have been trading or into the stock market for, but just a year or two ago, Nvidia had a stock split, a 10-for-1 stock split, and it was trading around $1,000, $1,200, and people were losing their mind. What's Nvidia doing? It's in a bubble. It's got to come down. It should only be at $400, which would be equivalent to Nvidia trading at $40 right now. Now Nvidia is trading above 211. That would be equivalent to Nvidia trading at $2,100 back when people thought 800 was a bubble. So it's been consistent. It just hit a $5 trillion market cap, the first company in history to ever do so. Yeah, AI is just getting started, Jack, bro. I completely agree on that. Guys, if you like these Market in the Morning segments, definitely drop a like and comment, and let me know if you want to see more. What I'd like to do is get more people from the Market AI team on these shows with me so we could have some conversations and discuss what they're looking at and why. So gold-wise, we're still looking for the longs. I would like to see this area right here. You see how I have a 1 hour, this red zone? This is, I call these supply zones. I use supply and demand as my trading strategy. Really just help simplify where our ranges are. So what I've noticed is, hey, look, we broke out of the range. Now we broke the supply. A broken supply becomes demand. I want to find a long position on a retest of this 4010. So this was YM. We could come back to gold and do our intraday price levels. So 4028 is the first price level to the upside, 4028 on market. So we're going to mark that out. We're going to market that out, market level. And now pullback levels 3990, 3990. And look at that, guys, 3990. That lines up exactly, almost perfectly within my 3-hour demand zone down here. And we see that markets rallied very strong off of this zone. So now I have two key areas on gold that I'm going to be looking for a long position today, and both of them require a pullback. Guys, it's very important that no matter what your trading strategy is, we don't really want to be looking for those breakout trades. A lot of times when we take breakouts, we don't know where we're putting our stop loss, and we end up getting stopped out. We get frustrated, and then the market continues in our favor, and then we get in and stopped out again. Like, guys, let's be honest. If you got in up here, if you saw markets were rallying, and you took the long right there, and this thing started to wick lower on you, you'd stop out. There's no reason to try to chase a position like that. If you want, wait for the candles to close, wait for the pullbacks, right? We want to buy the dips if we want to look to profit from the rips. So I am still waiting to see possible 40-10 for longs, and I would like to target just within this range, guys. A very simple trade, not looking for a super long extension. I'm just looking to trade from range low, which is now over here around 40-10, to the range high, which brings us right back to our market key level of 40.28. So this is my A+ setup that I'm going to be patient for today on gold. It's 843 right now. Gold's still trying to move higher. We might not get this setup. If we don't get this setup, what I'm going to look for is a strong break above this level, and I'll look to see if we create any type of volume imbalance. As you guys remember from the last Market in the Morning, this is sort of what we were getting on gold before, except on the previous Market in the Morning, it's funny, we had a nice short position off of a broken demand zone. Here we are 2 days later, and we're switching our bias because fundamentals have started to change. The dollar's starting to get weak. And I knew all of this not because I'm looking at a Bloomberg terminal for hours a day or looking at CNBC. No, I just pull up Market AI. I almost called it Market in the Morning, which you guys could do too. Just pull up Market AI, and it gives me everything I need to know, all updated, live news, popular news, economic data, what's impacting. We even have general markets, market sentiment index. This is one of my favorites. Just risk on. So that tells me we're bullish for ES and NQ. Something I'll be very wary with, guys. What's up, Oz? Good morning, bro. Guys, we have our Trump tracker of 70 today. That is massive. Today's presidential announcement with multilateral meetings with Central Asian leaders, including Hungary's Orban. I do apologize on the mispronunciation. But a lot going on, and he does have, so this is at 9 a.m. There's a town call, in-town pool call, and then at 11 a.m., president makes an announcement. This is big right here, guys. President's making an announcement at 11 a.m. Be out of any trades and be ready for an impact, right? And what's great with market is 11 a.m. Listen, that comes around, I'm going to be looking at my charts. I'm going to have my live news tab up. So as soon as he tweets something, as soon as he announces something, as soon as a headline comes out, we're first to know. We beat the Bloomberg terminals. We beat everybody. We're first to know, right? Headlines, CNBC, Fox, those come out. Those are delayed. They have to create articles. Market is to the second. Headline comes out, it's right there. Let's see what else we can take a quick look at, guys. We can take a look at our economic, see if anything is coming in. We did have ADP. So ADP employment change came out because we didn't have the JOLTS, because JOLTS is the government jobs data that comes out. We had the ADP, which is the private sector. What's cool, guys, with market is, check it out. We get this big report. What's up, Dan? Good morning, man. So with market, it takes the report from wherever the source is. So here's our ADP report. And we come down here, and if we want to know the analysis, well, what's this report read? ADP employment changes, a gauge of employment in the private sector released by the largest payroll processors in the US, yada, yada. Impact. This is one of my favorite parts, guys. This has been super clutch for me. This is how I was able to catch a quick 7-point drop on gold yesterday like it was nothing. So higher than forecast, it tells you what the reaction should be. Lower than forecast, what the reaction should be. In line, and it shows you that for every single report. No other platform is doing this. Plus, it gives you a historic data chart so you could see the consistency or how these reports have been coming in historically. Now, my favorite part, it's funny, these are all my favorite parts, to be honest. Market's just hitting the nail on the head in every category. But report summary. If we want to know how the report came in, so sure, it tells me 42,000 jobs were the actual. Forecast was 25,000, so it came in higher. So good question. All this information in Spanish. At the moment, just the live news section has a translate option, which could go to all languages. We are working on getting multi-languages across the whole platform, though. So definitely keep an eye on that. We got you guys. Yeah, first to know is super clutch, Luke. I mean, it's the difference between getting out of a trade because news came out and holding the trade because you didn't know news came out and getting completely liquidated, like getting crushed. So here we go. Look, report summary. It gives us the full report overview and it highlights the most important parts for us. So it takes that whole big PDF we just got, especially when it does a government report. It's usually like 10 to 20 pages of a PDF. Boom, right here in 4 quick categories. Report overview. The ADP National Employment Report for October 2025 provides an independent measure of U.S. sectors in labor market. Private sector's jobs in October, marking the first increase since July 2025. So again, this is information that we wouldn't have known just by looking at the numbers, but we would know by looking at our report overview. First increase since July 2025. That's a good sign for the job market. Bad sign for rate cuts. Pay growth remains flat at 4.5 for job stayers and 6.7% for job changers. So that basically means people that are staying with the same jobs they're with, they're seeing possibly they're seeing salary increases of 4.5%, whereas people that are leaving, right, leaving jobs, looking for new jobs, are getting a bigger increase because they're able to say, hey, listen, I was doing this here. I would like to make XYZ there. Sort of like job hopping, but not so quickly. Private employers added 42,000 jobs in October. Job gains were prominent in education and health services, trade, transportation, and utilities. Again, we wouldn't have known that had we just looked at the numbers. Yeah, we could take a look at the COT report. I will mention, guys, like we said before about the whole government shutdown. Unfortunately, we're not getting some data. So we're not getting the COT report. We're not getting jobs, and we're not getting inflation unless it's from a private sector. So COT report, that's our commitment of traders positioning analysis and insights. Unfortunately, the last time we got the COT report was September 23rd. Guys, this is the longest ongoing government shutdown in U.S. history. Thanks, Trump. So, a lot to go on, a lot to take into consideration. In my opinion, guys, my biggest worry and concern of this government shutdown, obviously, I mean, they're taking food away from many who need it with the SNAP benefits, but they're delaying job reports, they're delaying inflation data. I think what they're doing is they're blindsiding the Fed. So if the Fed makes the decision to cut rates, they could say, "Oh, that was a bad choice, markets crashed, that was your fault." Or if they make the decision not to, "Oh, bad choice, markets crashed, Fed's fault." I feel like it's a bit of a scapegoat at this point. Like most things we've seen during this presidency so far, everything's got a reason behind it. This government shutdown is not for nothing. Why? We want to be prepared for it. If you're a long-term investor, we want to be careful, right? These reports that will come out, dude, Jack, I'm telling you, man, this is wild. We are in quite the economy. We're in quite the market, quite the world to be living in, quite honestly. Let's take a look at NASDAQ. Always good to check on our tech. NQ and gold are my bread and butter. Absolutely love them. Take a look. NASDAQ is in a bit of a tougher range. We've had this huge 3-hour supply zone. You guys see how big this area is. Massive zone. But every time we step into it, sellers bring us lower. Sellers brought us lower. So I wouldn't look to buy in this zone. If anything, I'd look to see if we could break above it, retest the zone, and use it that was resistance as support. Now let's also look for our market levels. Market level to the upside is 25,950, 25,950, and it looks like 25,950 is going to be right over here. 25,950. Perfect. So that lines up with my bullish bias to say, okay, if we can start to break out of this zone, I'll look for the pullback retest and target the 25,950. Pullback level 25,600. 25,600 is fairly deep on the NASDAQ. It's all the way, pull this down, 25,600 right over here. So it is below my demand. I wouldn't want to see 25,600 be hit. And this is another great way you guys could use market levels. You could use them along with your own analysis to help give you that confluence and confidence you need in your trades. So for me, this 15-minute demand zone down here on NASDAQ, this has to be the area that we hold, or else guess what? We're most likely going to break it, retrace, and that'll be our short position, right? So I want to be able to make trade setups off of every zone and every level I find and use my fundamentals to help give me that confidence. So right now on the NASDAQ, I see that we're higher time frame bullish, lower time frame, intraday time frame slightly bullish too. So I wouldn't really be looking for the shorts then unless we do get that break. But because we'd be really looking for more longs, I'd really want to see if we could pull back to the bottom of this range and then go long and just trade the range, guys. When we're trading a range, it's a lot more probable than it is for an extension trade, right? A lot of people try those breakouts, they fail, they get stopped out, they reverse, they fail. It's not worth it. Create zones, do your own analysis ahead of time. That will keep FOMO out of the market. That will keep your head in the game. And another thing too, guys, if you feel like you're sort of stuck, you're having a tough time finding the swing of things, you feel like you're forcing trades, you're not sure what you're doing, take a step back. The market's not going anywhere. Be a spectator for a few days. When we're a spectator versus a trader, we're able to watch the charts, read the information it's giving us with zero married bias. A married bias is basically, hey, I'm short today and I'm not going to change my mind no matter what comes out or what the market does. We want to watch the market with full neutralness to say, okay, listen, we're bullish. We made a higher high. We made a higher low. I'm going to be bullish. Hey, we just broke that higher low. Now we're forming back to the downside. I'm going to wait and see if this plays out. It didn't play out. It reversed after that. I'm glad I didn't take the puts or the shorts. There's so many ways that psychology plays a huge role in trading. And if you find yourself taking these breakouts or taking trades you shouldn't, take a deep breath, sit back, spectate for a couple days. Markets aren't going anywhere. Markets aren't moving without you. They're moving regardless. So what's impacting NASDAQ, man? NASDAQ 100 rose intraday as Supreme Court skepticism over Trump's tariff authority boosted risk appetite. That's interesting, man. They're worried about Trump's tariffs, which boosts risk appetite, which is a risk on. That's buying. Strong demand at the 50% fib retracement confirmed technical rebound, while mega cap tech stocks led gains. Tariff relief hopes and improved inflation outlook supported sentiment, though some technical indicators remain neutral or slightly overbought. So some of the technicals or equities that it's referring to is going to be things like Amazon that had a great earnings report. Amazon also announced that they are doing, I believe it's a $38 billion deal with OpenAI. OpenAI is giving out billion-dollar deals like it's candy lately. Nvidia gets a few billion. Nvidia gives Intel a few billion. OpenAI gives, oh no, I'm sorry, it wasn't OpenAI. It was Oracle. Oracle and OpenAI, they teamed up, partnered with 300 billion. I mean, I think they're just making numbers up at this point. Bubble or not, I don't know. Once we start throwing around billions like it's candy, or we're Oprah over here giving away these billion-dollar partnerships, you get a partnership, you get a partnership. That might be a little bit of a sign of, if not a bubble, possible slowdown. Because we have to remember too, if they're investing these billions and billions and billions into partnerships, they want to be looking for a return on that too. If they don't find those returns in the next coming years or so, it's going to have a bad impact. That's going to be a real strong move back lower. So NQ, we went through some of the technicals. Tech sentiment, mixed performance among mega caps with Alphabet and Tesla leading gains. Let's take a look at Tesla. Tesla was another one from earnings that I was looking at right off of 420. Has rallied since to 470. Not at all-time highs yet on Tesla, but it looks like it's getting ready to. I wouldn't look for any long positions on Tesla up here because we are at the top of our current range. See that right there. And guys, what's cool too is if you're an equity trader, you trade stocks, we have an equity section in market as well. Check this out. We have equities, options, call heavy, a lot of call heavy right now on our large cap. Tesla, what's going on with Tesla? Break it down for us. Tesla shares declined slightly from recent highs following shareholder debates over Elon Musk's proposed $1 trillion performance-based pay package. That's huge, guys. I didn't know about that Elon Musk pay package until I read it right here. The package requiring shareholder proxy approval has sparked concerns about broad independence and fiduciary conflicts, while Musk has threatened to leave if rejected. That's massive. That is massive. I'm sorry, Musk is threatening to leave Tesla? And he's just going to leave his own baby? Despite this, Tesla remains supported by strong call option activity and positive analyst price targets, though near-term uncertainty weighs on the sentiment. Uncertainty is always a red flag when it comes to stocks and I was going to say stocks and options, but mainly just stocks and the market, guys. Unless it's gold. Gold loves uncertainty. Let's see. Unfortunately, again, CPI, we haven't gotten CPI. We had CPI October. Let's see. We had a Fed rate cut recently. We're down to 4% on that. Guys, a lot's been going on in this economy. Guys, let me know if you guys enjoyed today's show. Drop a like, drop a comment. Do appreciate you all for tuning in. It is 8:57. We've got time for one more ticker if you guys would like. Take a look at the S&P 500, which we see on the daily time frame, was pulling back for the past, I'd say, week or so. But since then, we've created a higher low. So again, markets, yes, they've been bearish a bit more recently, short term, but overall, long term, guys, even just looking at this daily time frame, we're clearly making higher highs and higher lows. This is a bullish trend, really looking like ES wants to hit 7,000. Guys, is ES hitting 7,000? When do you think it happens? Before December or after December? It's a whole month from now. Let me know. Let's see. Yo, you got it, Kevin, for sure, man. For sure. So we checked our Trump tracker. We checked our live news. I mean, we're pretty ready for today, guys. We saw everything we need to do, and that's with the help of market. Yeah, dude, absolutely. Guys, market AI just makes everything so much more simple, so much more laid out for us, and it helps to co-align again with our own technicals. We should never be entering the market blindly, whether it's fundamentals or technicals. Before this, I was doing my fundamentals, doing research, doing all these reports, going through all these articles and stuff. Now it's as simple as what you guys just saw here. In 30 minutes, I was able to cover the S&P 500, the NASDAQ, gold, the dollar. We did a little bit of the VIX. We did the Russell. I'm sorry, not the Russell. We did the Dow. Guys, we covered the whole block right now in 30 minutes thanks to Market AI. So if you're not using it yet, check it out. It's marketedge.ai is the website. And make sure that you guys check it out on Instagram and X as well. Market_AI. follow me on Instagram is at Trading with Kev. Yeah, Mano, if you want, guys, this session is recorded. We're going to be wrapping it up in a few seconds. Because we covered gold, S&P, NASDAQ, and everything, make sure you rewind, go through some of those levels, and find those setups. Because we were looking for, and I'll cover real briefly one more time on gold. For gold, we really wanted to see if we could range back to this 410 area. This was a broken resistance, now becomes support. So here's our technicals lining up with our fundamentals. Fundamentals telling me bullish, so I want to buy the dip. So let's see if we could sweep this low, buy the dip, and then trade it back to the top of the range, targeting our market level. Beautiful stuff, guys. Great trade setup. I hope you guys enjoyed today's show. I will see you all next Tuesday. Hit like, hit subscribe. Ooh, look at this, guys. Gold might be making that turn now. We'll see. We'll see, guys. Take care. Happy trading, and I'll see you all later.